Imagine waking up on January 1st, 2026. You check your investment portfolio. 3 small positions you took in December have doubled, tripled, or even quadrupled in value. Sounds like a fantasy, right? But here's the reality. Every single year, there are penny stocks that deliver exactly these kinds of returns. The problem is, most investors either never find them, or they pick the wrong ones and lose everything. I've spent the last month analyzing hundreds of penny stocks. I've narrowed it down to 3 companies trading under $5. They have everything you want to see. High revenue, growing customer bases, approaching profitability, and specific catalysts that could ignite their stock prices. Today, I'm going to walk you through my complete framework. Then, break down 3 specific stocks that could explode before we ring in 2026. This is not financial advice. This is education. By the end of this video, you'll know more about evaluating penny stocks than 99% of retail investors. Before we dive into specific stocks, you need to understand my framework for identifying penny stocks worth buying. I have 6 non-negotiable criteria. First, the company must have real revenue happening today, not promises. Second, I need to see a clear path to profitability, with improving metrics each quarter. Third, they must have strong gross margins, ideally above 50%. Fourth, they need sufficient cash for at least 12 to 18 months without needing dilutive stock offerings. Fifth, I look for insider ownership and insider buy-in, because if management doesn't believe in the company enough to invest their own money, why should I? And sixth, there must be a specific catalyst on the horizon that could drive the stock higher. With that framework in mind, let me reveal the 3 penny stocks that check most of these boxes. The first stock on my list is Microvast Holdings, ticker symbol MVST, currently trading around $1.50 to $2 per share. Microvast is a battery technology company focused on electric vehicles and energy storage. And they're doing something really interesting. While everyone talks about lithium-ion batteries, Microvast is developing ultra-fast charging battery systems that can fully charge in just 15 minutes while maintaining long cycle life and enhanced safety. This is massive because charging time is one of the biggest obstacles to mass EV adoption. Microvast's technology addresses this pain point, and they're already supplying batteries to commercial vehicle manufacturers in North America, Europe, and Asia. In their most recent quarter, Microvast reported significant progress toward profitability targets and reaffirmed revenue guidance between $165 million and $175 million for fiscal 2025. What makes this stock interesting is that the EV battery market is expected to explode over the next 5 years. Microvast is positioned to capture a piece of this growth, especially in commercial vehicles where fast charging is critical. The risks are real, though. They're still unprofitable and burning cash. They face intense competition from much larger players, and the stock has been extremely volatile. But if they execute on their technology roadmap and land major contracts with Tier 1 automakers, this stock could easily be at $5, $8, or even $10 within 18 months. That's a potential 5x return, which is exactly the kind of asymmetric opportunity I look for. The second penny stock I'm watching is Nikola Corporation, ticker symbol NKLA, trading around $1 to $2 per share. I know Nikola has been controversial with all the drama around their former CEO, but the company today is very different. Nikola manufactures battery electric and hydrogen fuel cell trucks for commercial transportation, and they've actually started delivering real trucks to real customers. In their most recent quarter, they delivered over 90 trucks, and they're ramping production in Arizona. What's interesting is they're targeting heavy-duty trucking, where electrification is still in early stages. The total addressable market for Class 8 trucks in North America alone is over $30 billion annually. And if Nikola captures even a small percentage, the stock could be worth significantly more. They have strategic partnerships and purchase orders from substantial customers. The risks are substantial, though. They're burning cash rapidly, they're still unprofitable with no clear timeline to positive cash flow, and they have a damaged reputation. However, the stock is trading at such depressed levels that it's pricing in near zero probability of success. If they prove skeptics wrong, the upside could be enormous. This is definitely the highest risk play on my list, but also potentially the highest reward. I would only put a very small amount into this, maybe 1% of your portfolio. The third penny stock is SoundHound AI, ticker symbol SOUN, currently trading around $4 to $5 per share. SoundHound develops voice artificial intelligence technology for automotive, restaurants, and enterprise applications. Imagine talking to your car and it understanding complex commands, or calling a restaurant and placing orders through an AI system that sounds completely human. That's what SoundHound enables. What makes this exciting is the explosive growth in voice AI adoption and their recent financial performance. In their third quarter of 2025, they beat revenue expectations and raised full-year guidance, which sent the stock up over 20% in a single day. Revenue is growing at over triple-digit year-over-year rates as they add new automotive partners, restaurant chains, and enterprise customers. The total addressable market for voice AI is projected to reach $75 billion by 2030. SoundHound is one of the few independent players that can compete with tech giants like Google, Amazon, and Apple. Their advantage is they're platform agnostic and can work with any company. The stock has been incredibly volatile. But if voice AI becomes as ubiquitous as I believe it will, SoundHound is positioned to be a major beneficiary. Now, let me address risk management, which separates successful penny stock investors from those who lose money. Position sizing is absolutely critical. I would never put more than 10% of my total portfolio into penny stocks combined. For these three stocks, I might allocate 3% to Microvast as my highest conviction play, 2% to SoundHound, and 1% to Nikola as pure speculation. This way, even if Nikola goes to zero, it only represents 1% of my portfolio. Second, I would dollar cost average into these positions rather than buying everything at once. Third, I would set strict rules for when I'll sell. For losses, I use a 30% stop loss. On the upside, I sell 1/3 of my position if the stock doubles, another third if it triples, and let the final third run. This allows me to lock in profits while maintaining exposure. Let me give you perspective on realistic expectations. Most penny stocks fail, period. Even with careful analysis, you're probably going to be wrong more often than you're right. The key is having a few big winners that more than offset your losers. For the three stocks I've shared today, I genuinely believe each has the potential to double or triple over the next 12 to 18 months if they execute well. That's not guaranteed, but based on my analysis, those are realistic outcomes in a bull case. You could lose 30 to 50% on any of them, which is why stop losses are so important. Penny stocks are not suitable for everyone. If you're close to retirement, if you need the money within 2 or 3 years, or if you don't have an emergency fund, penny stocks are too risky. This is risk capital. Money you're willing to gamble on high risk, high reward opportunities with the understanding that you might lose everything. So, to wrap up my 3 penny stock picks heading into 2026 are Microvast Holdings for their breakthrough battery technology, Nikola Corporation as a high-risk speculation on electric trucks, and SoundHound AI as a play on the voice AI revolution. Each faces real challenges, but also has specific catalysts that could drive significant appreciation if they execute. Keep your positions small, use stop losses, take profits along the way, and constantly reassess your thesis. If you found this valuable, subscribe for updates as we move through 2026. Drop a comment below and let me know which stock you find most interesting. And please, this video is for educational purposes only and is not financial advice. Every investment decision should be based on your own research and risk tolerance. Thanks for watching, stay smart, stay disciplined, and remember that building wealth is a marathon, not a sprint.